with you, do some Q&A, some questions, some answers, just see what people wanted to chat about. Mel and I are going to be trying to do this every single Wednesday, sometime between 12 and 1 p.m. Eastern time. Just coming live at you with some questions. I know I was on Instagram, I had some earlier about, is it easier to invest, closer to where you live or more long distance? Um, this is going to depend, right? Obviously, when you are closer to the asset, some people think it might be easier than long distance investing. I I used to believe that buying something in my own backyard was a lot easier, right? And is it in some ways? Yeah, absolutely it is. You can drive by, you can touch it, you can see what's going on. It's a little bit more comfortable in that, but is it necessarily easier? I don't know. And because when you live closer to the asset itself, you're going to be more prone to want to be more hands-on, right? If you see something, you're going to want to fix it. You're going to want to take the phone calls, all of that. And this will depend, and there's nothing wrong with that, obviously, but this will depend if you want to be more of a landlord or more of an investor, right? So when you're more of an investor, you're more likely to, and I've done both, so there's no wrong. I've made a bunch of money both ways, but when you're more of an investor, you're more likely to invest, have a property manager, have them take care of everything, and really be hands off, right? Manage the managers is kind of what I like to do. Let me just open up the chat. There we go. So manage the managers is what I like to do. And that's the thing. When you don't live or when you invest somewhere that is not in your own backyard, it will be easier to do that because proximity, right? You can't drive by it. If you're investing in a different state, a different province, a different country, a different continent, you just can't do that, right? So again, it all comes with pros and cons. In the beginning, it is scarier to say, you know what, I'll go outside my market, but definitely doable. I still remember the first time we went outside of Ontario, and then the first time we went outside of Canada, and then when we went to multiple states, and then when we went to Costa Rica, right outside of North America. Definitely scary, not going to lie. It was definitely scary, but looking back now, for example, actually, you know what? One of the managers sent me a report the other day with our monthly income and expenses. And they said we had to change the taps. And we made an executive decision. They asked if I wanted the single versus the double. And I said, they just made the decision and fixed it. If that was in my own backyard, I would have been more inclined to take a look at it, see everything. Now it's just, here's your report. We changed the taps. It's the tenants are happy. The short-term rental is still coming in. It didn't have any effect, negatively or positively, and it's done. Right? Like, what am I going to say to that? I'm nothing, right? All the way from Costa Rica, it's managed for me. Just get a report from the manager. So there's no right or wrong. But that was a question we had gotten was, should I buy local for my first one or should I go long distance? No, I just tell people, because a lot of people that message me, they live in hot markets, right? They live in larger urban centers. And if you have questions, put them in the chat. I should have said that earlier. If you have any questions, put them in the chat. Every Wednesday we come live to you with some Q&A. But there's no wrong answer. We've done both. At one point, Mel and I were self-managing 76 units, I believe. Full-time jobs, 3 kids, 2 dogs, managing 76 units. And it started to become not fun, right? Because it was just too much. So now, again, outsourcing all the property managers and managing the managers. Oh, I butchered that one. But yeah, so there's no wrong way. Something else I was just touching on. Oh, a lot of people live in larger urban centers and they'll say, Dave, I'm in a hot market. The cap rates are so low. The purchase prices are so high. The cash flow is so minimal. I just can't, every offer has 50 different offers on it. And it's like, okay, so look at it this way, put your investor hat on, live where you want to live. That's not a problem. Live where you want to live. However, invest where returns, there's the chat, invest where returns are best, because you can do this cross-provincially, cross-state, cross-country, like I just mentioned, different continents, okay? So if that's one of your big questions is, should I invest in my backyard or should I invest in long distance? First thing is I would look at your preferences, right? What's important to you. If you're in a big market and you can't necessarily cash flow, you can cash flow anywhere, but it's going to be harder to cash flow or harder to find deals. Then look at investing in different markets, right? Investing in markets that have more, let's say, landlord-friendly laws, that have higher cash flow, that you can trust a property manager to take care of it all for you, so you can be that passive investor. So I just want to answer that question. I think it was from Jason earlier. Any other questions, guys? Put them in the chat. Do not be shy. Someone mentioned to me the other day, actually, you know what? This is something I get all the time as well, is do you still find deals on the MLS, right? Everyone always thinks you can't find deals on MLS. And when I say MLS, I mean like Realtor.ca, Realtor.com, LoopNet, Zillow. I am here to say, yes, you definitely can still find deals all over the place. I use other apps as well. I'll be letting you guys know in the upcoming weeks. But there's so many ways to find deals. You just have to understand how to do it. And I think, oh gosh, one of our trusted colleagues we were speaking with, I think it was last week when we were in Philadelphia, something like a staggering statistic: 60 to 70% of deals are done on the MLS, right? So people are still thinking you can't do deals on the MLS. That is 100% incorrect. All right. And I'm not making this up. This is one of my trusted colleagues had this stat. I forget where they had it from exactly, but they had that stat, which is absolutely amazing. So let me put it in the chat. There we go. So I'm on a couple different platforms right now. Someone says, what is a good cap rate? Honestly, it's subjective. Okay, let's touch on a couple of different things. People will say, well, Dave, isn't a higher cap rate means better? Not necessarily, right? In theory, typically a higher cap rate will mean a lower purchase price, maybe higher cash flow, but define better. You can have, and every market will be different, right? Every market will have a range of lower cap rates and higher cap rates. So if you're buying in a market where, I don't know, let's make it up, where it's 6% cap rate is the norm, and maybe 7 to 8 or whatever is the highest they go, and all of a sudden you got a deal, and I'm exaggerating here for example purposes, you got a deal that's at a 10% cap rate. Well, you're thinking, holy smokes, Dave, this is a higher cap rate for this area. This must be a smoking deal, right? On paper, high level, yes, but how much deferred maintenance is in this building for the seller to want to liquidate it at such a high cap rate in comparison to what's going on in that market? So I see a lot of people just focus on, the 1% rule, the cap rate. It's an indicator of where the deal's at, but it's not the end all be all. So for that example, let's say you have a building in this, I'm making up a market here, that has a much higher cap rate than all the other buildings. Well, you can expect definitely some deferred maintenance. What else is going on with the building? Are there, is there litigation against it? Is it a fire sale? I definitely look deeper than just the actual cap rate. Okay. Wakaz, hello, sir. Any advice for any new, fresh minds? Yes. Okay. Something that I wish I could go back. Well, I kind of did it, but something I wish I could go back and tell myself is, in the beginning, a lot of people, when Mel and I would talk about our goals and what we wanted to do and buy a lot of real estate, unfortunately, a lot of people, naysayers, would say, Dave, if you want to scale, you have to have partners. You have to have joint venture partners. Now, I'm not saying that JVs or joint venture partnerships or any partnerships are not ideal or not, a valid way of doing things. It's not the only way of doing it. And I'm so hypersensitive to this because so many people told me that in the beginning. So if you truly do not want partners or joint ventures, again, there's nothing wrong with the JVs and partners, but if you truly don't want that for yourself, you want to 100% own your assets, 100% control them, get 100% of the cash flow, the equity, all that, just like Mel and I do, you can still scale a portfolio using other people's money, creative financing, paying them interest, 100%. Yeah, you're going to pay them interest. You're going to pay to use the money, right? Everyone's got to pay to play, but you don't need to give them equity. Okay, so just that's one thing I wish. Well, I guess I didn't know it. That's why Mel and I have never had JVs or partners, but definitely what caused. Just know that if you want to do it on your own, you can. You can scale a portfolio. Other things, definitely what's the word I want to use there? Definitely get a mentor, coach, someone that's been there, done that. Like Mel and I have spent hundreds of thousands of dollars on coaching and mentoring. I wish I spent more money sooner. Okay. I've never gone into something and went, oh, I regret learning that, or I regret being taught that, or I regret knowing more than I did yesterday, right? Said by Dave, never. Okay. So I've got Mel and I have 4 coaches at the moment. We just signed up with a new coach this week, actually super, super excited about it. And he said something to me that I absolutely loved. He said, so that will cause, this is all going out to you and everyone else to listen to, but the coaches and the mentors that you pick should also have coaches and mentors. And I was like, wow, that actually makes total sense. No one knows everything. No one's been everywhere, done everything. And that's why Mel and I continue to have coaches and mentors, because you can always learn. You can always get better. You haven't done everything. So that's why when we like passing on knowledge to our Action Family Mentoring Program, I pride myself in going, guys, well, now I got 4 coaches, but guys, I've got 4 coaches in my corner, 4 mentors, because when I've got stuff going on or I need, outside of Mel and I sounding board, I've got 4 people who are much further ahead in different ways, not just real estate, life, business, all sorts of different stuff that I can turn to in my corner, which in turn makes me a better coach and mentor and helps my students become better. So cause definitely you can do it on your own. Definitely get some coaching and mentoring. That's what I would say, man, when you're starting out. Trisha, I hear it all the time. Oh, you have to have joint venture. And again, guys, please do not take this as I'm saying don't do JVs, don't do partners. I'm not saying that at all. I have so many friends and colleagues that do JVs. They do syndications. And that's awesome. They make a lot of money. Like in real estate, there's so many ways to make money. I've got friends that do funds. I've got friends that do REITs. Like I've gone down the rabbit hole. It just wasn't for Mel and I. But that's the cool thing. As long as you know what you're doing, you can do JVs. You can do solely owned. You can do syndications. Okay, so that's what I love about real estate. There's a place for everyone. There's an avenue to make money, cash flow, generational wealth for everyone, as long as you put the work in. It's obviously not going to be an overnight, you know what I mean, success or millionaire, that type of thing. Don't go looking for that in real estate. It doesn't happen. Cindy, do you think it's a good idea to buy a new development? If so, should be on an LLC. And Cindy, I'll talk about Canada and I'll talk about the US. So in the US, I open up a new LLC for every single purchase. Now, that being said, I was yesterday was when I was driving. It doesn't matter. I was speaking with our cross-border attorneys and we were talking about different things. And I don't want to say it's never a yes or no or an all or nothing. I would definitely talk to an investor-focused attorney and CPA or lawyer and accountant so that they can help you structure yourself. Because if someone says you should always do this or never do this without knowing your backstory, honestly, that worries me. Okay, because there's so many what ifs, Cindy. Definitely, well, I shouldn't say definitely. Most likely, you're going to want to own it in an entity. Most likely, it's going to be an LLC, but there's also C corps and S corps But again, I don't know your backstory. I don't know what's going on. And I'm not an accountant. I'm not a CPA. I am not a lawyer. I am not an attorney. But yeah, I own all my assets, all my businesses, definitely in entities. But definitely speak with a pro on that one, Cindy. I know I gave you a vague answer there, but it all depends on your circumstances, right? And your end goal. What's the end goal? Are you passing it on to family? What's the word? Succession planning. What's the succession planning there? There going to be other partners, yeah, you're welcome, Cindy. I know I kind of I went vague on you, but just keep that in mind. But yeah, good question. Hello, sir, hear this all the time. Buying it as an asset. Yeah, so definitely talk to an investor focused. I always say investor focused people will say, speak with an attorney or speak with a lawyer, speak with an accountant, speak with a CPA. You have to add it. Well, you don't have to do anything you don't want to. You should be adding in there, and I always make sure to do it with an investor-focused one, okay? And I'm not throwing, daggers, or I'm not throwing shade at any different, professional. I literally hear this multiple times a week, from lawyers, from attorneys, from mortgage brokers, from accountants. Dave, you can't, let's just make it up here. The Dave, seller financing, doesn't work here. Using someone's registered funds, well, that's elite. Like, no, it's not. Okay. Just because you don't know how to do something, and I'm saying this with all respect, right? It just because you don't know how to do something does not mean it's not doable or doesn't work in this area or is illegal. And I always use the silly example, right? Like, I don't understand how oxygen works, right? But I'm breathing it every single day. Doesn't mean it doesn't exist. And that's obviously very sarcastic, but that's the same thing with the professionals. You have to deal with the mortgage brokers. They have to understand, like, if you're going to a mortgage broker and they tell you, like, let's say, for example, you got a deal under contract, and in the deal, in the agreement for purchase and sale, in the contract, you have in there, let's make it up, the seller is going to hold a second mortgage of, I don't know, 25, 30% as your downstroke, as your down payment, right? You're going to give them some deposit, right? Some earnest money, some EMD, some deposit or earnest money. And you got that deal under contract. And you go to a mortgage broker and they say, oh, well, you can't do that. You can't have a second mortgage behind it. I'll never find you a financial institution or a lender or private lender that is willing to do a first mortgage. I'm not saying that mortgage broker is necessarily wrong. I'm just saying that they might not be the most investor focused. You know what I mean? So an investor focused mortgage broker will say, okay, having a second mortgage behind from the seller will limit your funding pool, right? I know I'm not going, to any of the A lenders because they're federally mandated and federally regulated, and they just don't allow for those high ratio loans and that type of thing. And everyone's got different wording, right? So just, input it here. But the good thing about dealing with investor focused mortgage brokers is they'll say, okay, this might limit my pool of lenders. However, let me talk to a couple of people. I'll put some feelers out. I'll come to you. I'll present you with some funding options, some financing options. Now, that being said, will it be the entire portion that you're looking for? No, some of them might want to have a lower loan to value, might be a little higher interest rate, things like that. But it's definitely doable. I think that is spell. I'm not sure. There we go. Sorry, somebody. Hey, Dave, does OPM work in the US? Oh, good question. 100% it works in the US. Okay, let's think about this. Mel and I are buying real estate in the US, Canada, Costa Rica, Mexico, Dominican Republic. All right. And if you just name a few deals we got going on right now. We've got a deal under contract in Ohio. We've got a deal under contract in Costa Rica. We're negotiating a bunch of stuff in Texas, multiple places in Texas. 100% it does work. OPM, other people's money, definitely works. Costa Rica, we're actually exercising an option, kind of like a subject to, kind of like a wrap mortgage. They're calling it option there, the attorneys there, same difference. So we're exercising that creative financing way. In Texas, we actually had one, I'll have to follow up. I'm not sure how it's going with the subject to kind of financing way of doing it. Seller financing is my favorite, to be honest with you. But yeah, using registered funds. So yeah, 100% it does work in the 5 different countries. You just have to understand how to put it together. And you have to understand also how to pitch it to people, right? How to pitch it to, let's say if someone's holding seller financing, what are you going to say to the seller to be able to convince? It's not even convincing them. Once they understand the benefits and the perks, it's just having a conversation. And then it's, again, not convincing, it's negotiating with them. But yeah, 100% it works. Did you find it difficult to network? Networking, honestly, now, like with our Action Family Mentoring program in our network, like we have over 1,800 students in our networking group. So it's absolutely amazing. They're North America wide, right? And it's all people, it's not some random group, right? It's all people that have invested in themselves, They've paid to be in there. They've been coached, mentored by Mel and I. They understand creative financing. They understand how to put a deal together with as close to 100% financing as possible, how to pay people back, right? The exit strategies, absolutely. So that's where we do our networking, is inside of that networking group, right? But no, well, now with the internet, Canada, US, Costa Rica, and I've got my other networks, right? I'm licensed real estate agent now with EXP, and I've got my team. I shouldn't say team, right? I've got my group, because it's not a team. I'm not splitting commissions, or they're not splitting commissions with me, but my group, the EXP Action Agents, yeah, definitely easy to communicate. How can I join your program? Actually, I should have a link somewhere. I'm going to get the team to send me a link. If you're interested in joining our Action Family Mentoring Program, you're like, hey, Dave, I want to know more. I'll put a link in the chat here, and I'll let you guys know. Or if you are a licensed real estate agent, you're like, hey, Dave, I've talked about EXP. I want to join a group, someone at EXP. Also, I'll put a message here too to let you guys know. Susanna, hey Susanna, you're part of the Action Family. Good morning. We're trying to, you know what, Susanna? Wait till our live, and I'll be able to go more in depth, because you are part of the Action Family. So ask that question in the group, and I'll when I go live, I'll be able to answer that more in depth. Okay, I love it, love it, love it, love it. We'll get you up and rolling on that seller financing deal you're negotiating. Oh, okay. The team just wrote back. So if you are interested, guys, I'm not here to. But if ever you are interested, and you're like, hey, Mel and Dave, you might be new to us, you might have been following us for a while. You're like, you know what? I hear you guys talking creative financing, other people's money. You're doing it in 5 different countries. How do I get more info on this? So I just put it there. There you go. I pinned the message. So that's definitely the message to join or to book a call to join the Action Family. I'll put the message as well for if you want to. If you're a licensed real estate agent, and you're looking at joining our group at EXP, the Action Agents, which were part of Wolfpack with Mike Sherrard, and that, look them up on YouTube as well. But yeah, I'll get the team to send me that link. But yeah, any other questions, guys? Del Castello, good morning. Good morning to you too. You must be in the West Coast, because it's almost 1 p.m. Eastern my time. So you must be in West Coast. Whoops. There we go. Oh, and it's saying here that. So if you're looking at booking, it's not letting me post in some of the lives. Any other questions, guys? I've got a couple more minutes. I was close. I was on my way to the lake house. I was like, oh yeah, that's right. I got to do a couple other things at the office. I was gonna go live with you guys from our lake house, which is like 20 minutes from our house. The cool thing is, okay, think about this. No one asked the question, but I know I had said this on social media this morning. People ask me, Dave, can I buy an asset, a building that I'm going to live in with creative financing? So yes, you definitely still can buy an asset that you are going to live in with creative financing. So for example, a couple of different things. Let's make up some scenarios, and then I'll talk about our lake house. Let's say you buy a duplex. Okay, so there's 2 units side by side. Everyone has different names. Basically, a building with 2 units. Let's just keep it at that, right? Okay. And you rent out the one, right? Mortgage helper. Hopefully it's going to cover the majority of your bills, if not all, right? Depending on what you buy and where you buy and everything like that, and what the rents are. And then you live in the other one. This is called house hacking. You guys might have heard about it. Again, I did not invent this term or anything like that, but this is house hacking. Mel and I have actually done this in a couple of our buildings. When we moved houses, we've done it that place once. Mel did it alone twice. We've done it twice for sure. Anyway, we've house hacked back then when we didn't even know what house hacking was. It was just kind of common sense to us. But that's where exactly you could get into a building, you could own or occupy one unit, rent out the other. The financial institution will like it because it's owner occupied. They'll be able to give you a bigger mortgage, meaning less of a down payment for you, which will vary depending if you're in the States. You can get an FHA loan for 3.5% down. If you're in Canada, you can get a loan with an insured loan with 5% down. So a lot of different ways to do that. Okay, even if you will be owner occupying it. How to join your business idol? Like American Idol, a business idol. What was I going to say? The other way of doing it is like kind of like Mel and I did. We're owner occupying it, but it was a little different. So let's say if you buy a house, you could still get seller financing, you could still get creative financing. The thing you have to keep in mind, and this is what we did with our lake house. Again, we found an investor focused mortgage broker. They found a private lender. I think the guy was like a developer, or he was it doesn't matter. He was some sort of businessman, and he had some money and he wanted to put it in mortgages. So the mortgage broker basically did that for us. So we got a first mortgage through the mortgage broker. We negotiated with someone who had registered funds. So in Canada, that's your RRSPs, your TFSAs, your LIRAs. In the US, this is your 401k, your Roth IRA. Same difference, just different countries. So we negotiated to use the person's registered funds as our second mortgage. So first mortgage from the mortgage broker from the private lender, second mortgage utilizing registered funds, which came up to 100% financing, 100% loan to value, 100% financing. Now, I kind of said it this morning, we did a BRRRR, right? If people are wondering what the BRRRR, it's B with 4 R's. So what is it? Buy, renovate, rent, refinance, repeat. So it was kind of like a renovation. I say it's a BRRRR, but I'm the tenant. Mel and I are the tenants and the kids. So not your typical BRRRR, but that's literally what we did. We went in, we had pink carpets, it had like shag, and everything was chopped up and drop ceiling, and like it was stuck in like the gold tub. Or no, the tub was brown, the taps were gold. I know gold is coming back, but not this style. Had a bidet, it had like, anyway, it was just totally retro. So we went in, we renovated using other people's money as well, promissory notes. And then got a new appraisal. The appraiser came back, waterfront property. You can never go wrong with, well, I guess you can if you do it wrong, but waterfront property. And we increased the value a bunch. So then got a new refinance, right? Got a new first mortgage refinance, which paid out all the other financing. And now we have, I was gonna say we're stuck with the lake house. Now we're left over with the lake house. We still have to make the mortgage payment. So it's a little different than an income property because, like I said, we're the tenants, but you definitely can still purchase either a single family home or your owner occupied place with creative financing. So if you are interested, click the link if ever you're interested in joining the Action family or learning more about it, or send us a DM and the team will get it to you. Or if you're a licensed real estate agent, you're like, hey, Dave, I want to join your group, the Action Agents, and become an investor-focused real estate agent just like you are. You don't have to be an agent either. I wasn't an agent till last year. I bought 240 units before I became an agent. Then just send us a message and my team will reach out. So amazing, guys. I'm going live with the Action family. Have an amazing rest of your Wednesday, and I will see you guys next week. Okay.